Donald Trump reportedly wanted it to be called the Cut Plan. But today the official proposal came out under the name Tax Cuts and Job Act. We've been waiting months for the details, but before we get down to it, let's take a moment to reflect on some of the promises the president has made over the past year plus.
We will reduce the corporate tax rate to no higher than 20%. My plan will reduce the current number of brackets from 7 to 3. We are doubling the amount of income that is taxed at the 0 bracket. We're increasing the child tax credit. We will ensure that the benefits are focused on the middle class, the working men and women, not the highest income earners. And it's not good for me, believe me. It will be the largest tax cut in the history of our country.
So a quick review. Analysts say although this is not the largest tax cut in history, the corporate tax cut would be if it goes through. And as Trump said, the plan puts the corporate tax rate at 20%. As for reducing the number of tax brackets from 7 to 3, he almost gets there, with 4 brackets laid out in the House plan, maintaining the 39.6 top rate for the highest income earners. As Trump said, the standard deduction would be doubled, though the personal exemption will disappear. The child tax credit is increased. But when it comes to that claim about focusing on the middle class, and believe me, it's not going to help me, this bill falls short, with provisions like getting rid of the estate tax, now paid only by those who die with $11 million in assets, alternative minimum tax, and more. Joining me to discuss this further are Ameek Ashok Ponda, tax attorney and partner at Sullivan Worcester. Good to meet you, Ameek.
Thank you.
Dan Primack, business editor at Axios, decipher the implications of the tax plan. We'll be doing it together. Nice to see you, Dan. So let me start with you. Here's my take, if I can. Yes, there's something for the middle class, but two, massive wealth distribution to the people at the top, punches a multi-trillion-dollar hole in the deficit. Am I close or not?
I think it's close. And the thing about the top tax bracket, right, which is earners married $1 million or more, it's true they don't get a tax cut, but they're also the ones who often benefit the most when big companies do well. And as you said, the real cuts here are for corporations.
But individuals are going to benefit from, this pass-through corporation thing where Donald Trump owns a mere 500 of them. Donald Trump doesn't agree with me, Ameek. Let's give him some time. Here he is criticizing a Washington Post story, the president.
There was a certain newspaper that wrote today that your competition was out there trying to say, it's for the rich, which they, of course, say routinely. It turned out that they weren't telling the truth. And the paper actually called them on it, which was shocking to me. Shocking.
Now, this is going to be tough. You have to decide who's right, the President of the United States or me.
Look, you're right across from me, Jim, so of course you're right.
Okay.
No, look, the distributional impact of any proposal like this is very complicated. You can see from
What is this thing?
This is the bill that came out today, double-sided.
You read it yet?
No, most of it.
Okay, fine.
On my way. It's my homework tonight. But look, anything this long, this complicated, you can start with the premise. It can't be that simple. And when you talk about the distributional impact, there's a lot of moving pieces, both under current law and this, where the law might be. So I think it might be helpful to understand what is this tax bill trying to get to. What the tax bill is trying to get to is a couple of really important objectives that the House Republicans have had for a while. They say to themselves...
Cutting taxes for the wealthiest people in the country who are their major donors?
So that would align with, for example, the estate tax cut. But you could look at the corporate tax cut, and they say to themselves, the tax rate in other countries is lower than it is in the United States. Can we make that a more level playing field? That is probably the biggest driving force behind this bill. Then with that, if that's your objective, if that's a correct objective, then you get to the next order things. Well, how do you pay for that? And just as important, if you're cutting taxes on corporations, well, people work for corporations, people own corporations, there are pass-throughs. How do you create level playing fields when you look around? So it's one thing to make U.S. corporations and international corporations level. How about U.S. corporations and pass-throughs? How about U.S. corporations and individuals?
But
that's the hard part.
There's also another issue in the corporate tax break. The proponents of this say all the benefits going to go to job creation.
And they're wrong.
A lot of others say it's going to go to provide more wealth for the owners of these corporations.
It is. Look, the evidence on this stuff usually, and here's a good example, right, is this issue of repatriation, right, which is when you have a U.S.-based company that's got cash overseas. We, several years ago, had a brief holiday on that where companies were allowed to bring money back, and it was the same argument. They're going to raise wages, they're going to hire people. No, they didn't. They bought stock back. And that's probably what's good. There's another one in here, and that's probably what's going to happen. Again, they'll buy stock back. There will be some increases in wages. Some companies will hire more, but there's not. But they could have put strings, and they're not.
Let's stay on the personal thing just for a second.
Sure.
One of my favorite things things, the fact check function in the Washington Post
Yeah.
gave 4 Pinocchios to
Yeah.
leading Democrats who said that if you make less than $86,000 a year, your taxes are going to go up. They said it is totally untrue. The bulk of the middle class gets some sort of tax break. While Paul Ryan said today it's $1,182, we have no idea what it is, but the bulk of the middle class is going to see some benefit. Is that not true?
So it can be true. There's valid perspectives all the way around. Look, we have 130 million plus tax returns in the country. Some of what we talk about when we talk about the middle class is we don't all have the same definition.
Of course.
Surprisingly, everybody up and down that 130 million thinks they're the middle class. You know, my definition of middle class would be right at the break point. In terms of people getting tax cuts, this stuff is extremely nonlinear. If I had to sort of say which way this is going, I would say that a lot of people in blue states are going to be hit because of the effective disallowance of state and local income taxes.
Well, there's a cap on it now.
Well, for property taxes, but income taxes are disallowed altogether. So there are elements of this bill which hit blue state residents harder than red state residents.
Is this good economic policy?
So it's a tough call. You can find an economist to state both sides of that issue.
Let's ask a guy who's not an economist but talks about this. Is it good economic policy?
It's not good fiscal policy. If you care, what's fascinating about this is you have, and which is why maybe it's got a better chance in some form of passing than otherwise it would, is that the people who would normally oppose this would be fiscal hawks on the right, who would normally say, wait a minute, you know, Bob Corker talks about eating your spinach. This is all Halloween candy. But it's going to blow the deficit up, definitely in the short term. Even if you believe in the trickle down, it's going to take years.
You agree with that? Yes.
I agree with that. I think the estimates that this will pay for itself through growth are extremely unrealistic.
So, but let's talk about corporations for a minute, not just the beneficiaries. Yeah, first of all, there was a poll the other day that showed that only a quarter of people had this as their top priority, tax cutting. It seems like they're more grown up than most of the people who represent us. If you did a secret anonymous poll, this is the both of you, of business leaders in this country, and they said, okay, here's a pile of, let's say, $4 trillion or $3 trillion. You can either do tax cuts, the bulk of which are going to accrue to you individually or to your business, or you can use that $4 trillion to make sure that our infrastructure is almost in the 21st century, that our education system trains workers so they can fill the jobs that you can't fill. What would they choose?
Yeah, so that's why we don't leave these choices up to a narrow group of people. We vote on representatives. We vote
if
on
we
issues
did
like
leave
this.
it up to a narrow group of people, what would they say? Would
People
they say,
vote
give me
in
the
their
money?
self-interest. People would vote in their
You
self-interest.
really think that?
I agree.
You think that too?
I absolutely think that.
That they'll take the tax cuts?
If that was a choice, yeah, they definitely
Is that because they really want them more, or because they don't believe that the alternative would happen, namely the spending on things that are good
I'll
for
go
their
with
businesses?
greed. I think they want it more, and they report to shareholders who they are consistently terrified of. So yeah.
Yeah, and I think people will find justifications, ad hoc and post hoc justifications for anything. As I said, that's why this is supposed to be a deliberative process. Everybody's supposed to be involved. One major critique of this is that it's been done, behind the curtain for the longest time.
Unlike Ronald Reagan, by the way, who did it with the Republicans and Democrats over a long period of time in the 80s before his
years of study. But one reason I'm glad this is out is because there's this idea out there that we could have a recreation of the 86 Act where we can lower rates and broaden the base. What this really shows is that's been a bit of a fantasy. The base is about as broad as it can be. And so when you're talking about lowering rates, so you're either going to run up the deficit, or you're going to start distorting the base, like not allowing interest deductions to business.
One last thing. Here's the president yet again on something that, if true, I think everybody would love. Here it is.
Most Americans will be able to file taxes on a single sheet of paper. What do you think about that, Kevin?
Simplification. Is that here?
There are parts of it. Let me say it to you this way.
Is that true?
Not like a lot of things Trump says. There's hyperbole to outright
Well, look, I last week met with the guy who runs TurboTax, which is the thing a lot of people file for. And I asked him, I said, are you terrified? Because if you can file on a postcard, you don't have a business. He has no concerns.
I mean, the simplification doesn't come from compressing the brackets and reducing the rates. Simplification comes from treating similar taxpayers in similar situations with a similar tax, and most importantly, not creating so many categories of income. If anything, this document creates more categories of income: the pass-through business income, the regular rates, et cetera, et cetera.
15 seconds. Is something like this going to be signed into law someday by President Trump?
I think ideas like this never die. So they kick around for a while. Now that this is out there in print, it has a chance at some point. If not soon, then next year, the year after.
Some sort of tax policy of some sort will get passed. This one specifically, obviously, will get changed. But I think the idea they're going to get it done by Christmas, I think, is fantasy.
Ameek, good to meet you.
Thank you so much
for being here.
Good to be here.
Great to see you, as
Thanks,
always. Appreciate it, gentlemen.